Hey, good evening. Brian Hoops from Midwest Market Solutions Market Insider TV. This is our quarterly stocks acreage report webinar. It takes place with our closing commentary in conjunction with that. And what a wild, exciting day it was with sharply lower prices going into the report, sharply higher prices following the report. And I was on the Commodity Wrap program on Sirius Satellite Radio this afternoon, airing this evening with Marlon Bowling, discussing the ramifications of the report. Ahead of the opening tonight, looks like we're going to open about 6 higher soybeans and about 3 higher in the corn. And wheat could be anywhere from 2 to 3 higher as well, kind of depending on which exchange you're looking at. But we'll talk more about the markets here individually as we go through this webinar. So follow us on Twitter at Midwest Markets. My personal Twitter handle is at Brian Hoops. Our website, MidwestMarketSolutions.com, where you can sign up to receive all of our newsletters and market information. We've been in business almost 20 years here now, with lots of experience. I have over 20 years, almost 25 years now of experience. 10 licensed brokers around the Midwest, with a lot of offices that can serve you. Our clearing firm is RJ O'Brien, who happens to be the longest active clearing firm at the CME. So Twitter feeds, text service, our audio, video commentaries, our Market Insider weekly newsletters, daily trader newsletters, our hedging platforms, all kinds of brokerage services. So we have what you need to be successful in marketing and hedging your crops. Take a look here at the information in June 1 quarterly stocks report, pretty much in line with expectations. We will convert these into what we believe we will have for carry in stocks for this new crop marketing year at the end of the webinar, and give you ideas of what we're looking at for carryover possibilities this year. Our June 1 stocks came in very close to the expectations, 4.1 billion bushels for corn, a little bit less than expected, down sharply from last year. Soybean stocks also down sharply from a year ago, 767 million, slightly below the estimates, but boy, almost cutting in half last year's total. And wheat stocks 845, again, a little bit lower than trade estimates and well below year ago levels. So some positive news there, but I think the market was really focused on these acreage numbers, and this was outright bullish compared to expectations for both corn and soybeans. That's why we saw limit up corn and sharply higher soybeans. The corn number here, 92.6 million, well below the trade guess. And don't want to call out anybody specifically usually, but a company like Informa that's been around forever, focusing on these markets and having such a great track record, they were 5 to 6 million acre increase. That would have put us into this 95 to 97 million range, and wasn't anywhere close, 92.69. So this has caught the trade off guard. Trade was, obviously expecting a big increase, as we were 17, 18, almost 20 lower going into the report, and that's what shocked us here, this 92.69 million. It is up from last year. It is up from the March numbers, but it's really not enough. Soybean acres, 87.55. That's actually below the trade guess by over a million, and slightly down from March. Now it is, again, up from last year. The last couple of years we've planted less corn and soybeans. A lot of it had to do with the flooding in 2019, and we'll look at some slides here in a second, some charts that kind of lay out how much corn and soybeans acres have increased, and they will likely be on the rise again next year with these higher prices. But for this year, we didn't buy enough acres, and we are going to have to start rationing the crop with higher prices. All wheat at 46.7 million acres, that is above the trade guess, and it's up from the March numbers, well above last year's, but producers added more acres than what was planned, all wheat-wise. So where did it come from? Well, the other spring was down from March, Durham was down from March, and the winter wheat was actually just a little bit increased from the March numbers. So recalculating, resurveying, a lot of this wheat did not get torn up or abandoned like some of the trade had thought, including myself. I thought there was a good chance we'd see some of that. I thought spring wheat would be down more than this as well. And USDA did use an abandonment figure for spring wheat acres of about 3.5%, and that's pretty normal, but it could be much, much higher this year because of the drought-like conditions that are ongoing in North Dakota and South Dakota. Durum acres down, as I said, winter wheat up. Cotton acres down from March, and then we've got sorghum, oats, barley. So total acres here at 252.8 million acres, just a little bit larger than the March numbers. Okay, this is a very interesting slide to me because this is a look at where the acres went. This is corn planted acres, and the big numbers that jump out. Okay, so you've got Illinois, a 300,000 acre change, Minnesota, 500,000 acre change, but look here at North Dakota, 300,000, Ohio, South Dakota, 400,000. So we increased 1.548 million acres this last from spring, from March until the final. But out of that, South Dakota 400,000. You add North Dakota in at 300,000, so that's 700,000, and then Minnesota 500,000. That's 1.2 million acres out of the 1.5 that is in a drought area or is stricken with drought. So these extra acres may not increase in yield much. So I think you have to bring your yield estimates down if you're looking at this objectively based on where these acres are at and the growing conditions. So North Dakota doesn't have a lot of acres per se, but they do in soybeans, and this is a big change and something that really caught my eye. Soybean acres, I talked about this exclusively with Marlin, extensively I should say, but you look at North Dakota, 7.2 million acres of soybeans this year. That's fourth largest in the nation. Illinois at 10.7, Iowa at 9.9. Those are your two big ones. But then look at this, Minnesota 7.7, again a drought area, and North Dakota 7.2 million. So you add in South Dakota at 5.5, you're talking, this is 13 or 12.7 million acres that is in a drought area of North Dakota and South Dakota. That's a lot of acres that are subject to some drought type conditions, and this could be significant for the soybean market. So yeah, big increase in North Dakota acres here, and they're the fourth largest acreage number in the entire United States. And again, acres down just slightly. So here's a slide I was referencing, major crops that were seeded from acreage-wise. This gray represents all the crops together. Here's 2019 when we had so much flooding. We were at about just a little over 238 million. So we've really ramped up back to in the 252 million range. That's pretty common with what we've seen over the last 30 years, going back to 1990. There's been a few years where it's been below that, of course, a few years where it's been higher, and these years that it was higher, these are high price years. Coming off of high prices, it attracts more acres. So we can expect with these high prices this year, next year acreage are going to increase. We'll find acres where to put them, and you look at the yellow here, this is soybeans. They had a pretty good increase over the last 3 years. We've added 12 plus million acres, and we've added a few corn acres. We went from 88 to 92 now, but not as a dramatic increase here as soybeans. And even wheat has found its way to add a few more acres from this 1 year. After trending lower for the last 20 years, we did see a 1 year bump here, adding a few more wheat acres due to higher prices. So higher prices will attract these acres. And let's take a look at how these balance sheets fare. So we go all the way back into 2006 and 7, but this is a column I want to concentrate on. This is my numbers versus the government, and these will be updated July the 12th in our next supply and demand report. So they'll update exports and ending stocks, and those are the keys that we want to look at. Right now, I am using a 175 yield, and that may be generous. Remember, last year's crop was 172. The year before that, 167.5. So if you use the last 2 years average, we're closer to 170. But we did have a string in here in 16, 17, 18, 174 to 176. So I think you have to come down from 179. I don't see this as a record-breaking yield. Maybe 175, that may be a little generous. But of course, we've got all of July, all of August weather that will determine this number here. And this is going to be the key. We know what these acreage numbers are. Abandonment, going to give us a rough figure of 84.9 harvested acres, and that gives us a crop of 14.858. And that is not enough. As you can see, I have total usage at 14.9. That means we're stripping ending stocks. Our total supply is getting stripped down. Our usage is record large. As we see ethanol usage increasing, we have food and seed industrial and feed usage all strong, and even exports improving just a little bit more. I think these USDA numbers way too low given the severity of crop damage in Brazil. That gives us carryout. I'm looking at just a little over 1 billion bushels and a carryout number or percentage of stocks to use under 7. That's the most bullish we have in history. We've had a couple years here at 7, and again at 7 this last year. That's where we were, and now we're under 7. This is a very bullish stocks to use ratio. I do think there's some upside potential here in the grain markets. And we'll look at charts right at the close. All right, so soybeans, we know what the planted acres are. We're going to have a little bit of abandonment, and this gives us our harvested acres. Again, yields are going to be determined in July and August, but I think this 50.2, it may be a little bit optimistic. That's what we've done the last couple years. We haven't really been too much above it, but it might be a little too early to say we need to drop this below 50. Of course, we have in the past, we've had 2019, 2017, we've been below 50, and that's really going to shrink our balance sheets. I don't think the USDA is too out of line on any exports here or crush or anything like that. I'm pretty much in line with where they're at already, but it does shrink our balance sheets up just a little bit, not too much. Really going to depend on this yield number. I think they could make a bigger adjustment this month, but I think it's too early. They'll make a size. I think they make an adjustment to corn, but not so much to soybeans in this July report, and that keeps our ending stocks number very tight. Carry out stocks to usage ratio very tight as well. For wheat, I think the yield does come down just a little bit. We know acres increased, and that gives us total production of 1.841. Again, our usage is higher than our production, so we're going to tighten up our balance sheets once again. I think they shrink just a little bit in here. Exports probably stay the same. Feed stays the same. Pretty much all this demand numbers stay the same. Maybe a little bit less domestic usage. So total usage could shrink just a tiny bit. But I think with yields coming down because of the spring wheat crop, we're going to see our ending stocks shrink. But again, not anything real specific. All right, let's look at some charts here. And this is corn chart. This is today's action. You can see we're starting to reestablish the uptrend with a series of higher lows and higher highs in here. Big move up with our next major target. I'm sorry, this is soybeans. I should have went to corn first. I apologize. We got the same pretty much chart pattern, just a huge outside reversal day. Series of higher lows, new highs being scored. You've got a little minor resistance here at 592, but I think your big resistance lies up here at these highs, 638 and 628. You've got this little downtrend line. I think we go test this without too much of an issue. From a standpoint of seasonality, when we can expect these lows, notice it's been following pretty closely. Should have a high coming in here, and it did. We said a low should be coming in here right around the 25th of June. Now this projects to a high about July 9th. So we may come back after the long 3-day weekend, 4th of July weekend, and maybe put in a top, of course, subject to what the weather does and if we're going to see any higher prices. I think you do. I think we've got to put some more premium into this market. We really can't attract any more acres, but if the forecasts are hot and dry, we'll start to take some back out. But there's enough crop damage in here. I think we need to put a 6 back in here at least, and maybe get back up in the 620 range for corn before we stall out. The soybean market, again, you've got resistance around 1438. 1466 is a lot of resistance, and you got your contract highs. This market makes a high a little bit later than corn. But again, coming back after the 4th, I think you rally the next couple days, putting in premium ahead of a 3-day weekend. And then it goes back to trading the weather, how much rain we have in the forecast. We have a lot of rain in some of these areas, the Dakotas, Minnesota, Iowa. We'll start to take some back out. But I think you do need to put some premium back in here because of this acreage number. I don't think we're done yet. I think we do go back up and test this area. Now, if you're a producer who's going to grow a decent crop, you may have some really good opportunities here. 1460 and up and above 625. I think that's where you start to be a little defensive. I want to look at Minneapolis wheat. We did make new highs, kind of negated this technical action. I've been hearing that millers are switching their mill usage to winter wheat because of the price disparity between Chicago and Kansas City versus Minneapolis. That would be bearish fundamental. The weather looks horrible. The crop is going to be a disaster. I usually say we're going to have a high right around 4th of July. So we may rally a couple more days, find a high, and then the market pull back. And then I think there'll be some more buying opportunities if that happens. Last chart I want to look at is Chicago wheat. It looks like it broke its downtrend line decisively here today. Very strong technical breakout, big outside reversal. Should be able to build on this, but you know it's wheat, so it may pull back, and corn and beans will have to drag it higher. All right, that is going to conclude our webinar. We hope you have had a successful day in the markets. If any of you would like to take advantage of our advisory services or our brokerage, reach out to any of our offices. You can find them at MidwestMarketSolutions.com.